Welcome to Nothing Ventured with me, Aarish Shah. This is the podcast where we explore the people and stories that make up the tech and venture ecosystem. Don't forget to subscribe, like, rate, and share the podcast because it really helps us get the word out to more people who are curious about understanding even more about the world of venture capital. This season of Nothing Ventured is sponsored by Odin. Odin helps angels, VCs, and founders to raise and deploy capital seamlessly. You can structure your SPVs and now run your funds, handle capital calls, portfolio management more smoothly and easily in one place. Founders use Odin to raise their entire round in a few clicks by simply sending investors a link and receiving investments immediately. Odin works with over 5,000 investors and over 150 emerging fund managers and angel syndicates globally. Head to joinodin.com to learn more. That's joinodin.com. Hello and welcome to another episode of Nothing Ventured with me, Aarish Shah. Today in the studio, I had with me Monik Pham and Reem Wyndham. Monique and Reem are founding partners alongside Tong Gu of PACT VC, an early stage VC fund backing founders who are solving key issues facing future generations. Using their ABC investment themes, they know that the best businesses ensure that commercial outcomes and social environmental goals go hand in hand. In today's episode, we talked about how unusual it is to have three women come together to found a fund. Relevant diversity and cognitive diversity. Building a fund at 23 and how to do it bigger and better. Spending a year talking and deploying their own capital before launching their fund. And how to mix commercial and impact metrics to understand how one drives the other and ultimately drives growth. Let's get straight into it. Monique, Reem, really great to have you in the studio with me today. In order for our audience to get to know you a bit better, let's go through a bit of a quick fire round. So one word answers if you can. What was your first job?
Well, my first unofficial job was working in an off license when I was 13, 14. My dad's off license and also selling CDs at school as a kid. But my first official job was in a corporate finance house.
Oh dear, okay.
First sort of official job was selling perfume on a street corner.
Okay.
And other sort of first job was making cell phone jewelry and selling that at 17.
Okay.
First real job paid was in advertising Saatchi & Saatchi in New York.
Okay. And what did you do before you got into the tech and venture ecosystem?
I was in corporate finance, so we were working on foreign direct investment, kind of supporting international investors with their investments in the UK.
Tech is different. I mean, VC versus other things.
Yeah.
I was just before London, sort of 10 years ago, for about 5 years. I was in the tech world, but based out of Abu Dhabi in the semiconductor space.
Okay.
Helping to build global foundries as sort of one of the very sort of employees number 4 or 5.
Amazing. Okay. And what triggered your move into founding PACT?
Well, prior to founding PACT, I was at another early stage fund, was part of the process and building that from the ground up with it was Solo GP fund. And, you know, it's great time building that and really learning kind of the ropes. I think both of us were kind of winging it at the time, but, you know, I was 23 at the time, built a fund, was managing, raised and managed just over 20 million at the time.
Yeah, and it was a great time because Monique was at that fund, slightly upstream to us. You guys were pre-seed to seed.
Yep.
And then you'd mentioned Tong, our third partner. Tong and I were at another fund, also kind of on an entrepreneurial fund journey with them as they raised their first fund.
Mm-hmm.
And so we were building up that portfolio. We also helped sort of build more of the entrepreneurial side of things, the investment process, brand, et cetera, similar to Monique at her fund. And, you know, the relationship just grew organically. Tong and I were in the same team working together, also working together with Monique, sharing deals, taking her deals to RIC, basically.
I knew I always wanted to launch my own fund eventually, and the first people I approached were Reem and Tong, and we just happened to all be women. So that's very clear. Like, that was a coincidence, a happy coincidence. They were just the smartest people I knew, and we have very complementary skill sets. So that's why we kind of got together.
We're going to talk a lot about that in the main podcast. And what would you be doing if you hadn't got into venture?
I'm not sure there's anything else.
Yeah, I don't really know. I studied law. I did want to become a human rights lawyer. I realized there's no money in it. So yeah.
Well, if you asked me when I was 4 or 5, I wanted to be a professional gift wrapper.
Okay.
She's very good at wrapping gifts.
Excellent. I might have to co-opt you. And let's talk about PACT. What's the thesis, stages, geographies, check size?
So Thesis, as you mentioned, we're an early stage fund, but we are very much focused on thematic investing. We really believe in long-term secular demand. So where is sort of that mega trend demand coming from? The three themes that we look at are what we call our ABCs. So it's access, betterment, and climate. Maybe 20, even 10 or 5 years ago, people would have thought that there's a trade-off between returns and sort of the commercial viability of a company and those types of themes. But given shifts we're seeing in values-based consumption and work, as well as shifts in regulation, not only is there a large demand, but it's one that's growing and that we're seeing will play out over a couple of generations. So it really is sort of our opportunity to kind of meld the values, the vision, the things that make us tick as three partners into a fund that really is building hopefully a better future, as well as kind of delivering those top decile or best-in-class returns for our LPs.
Got it. And check sizes, geographies?
Geographies, we really can invest anywhere, but we are focused predominantly UK, Europe, and in those themes, there's very strong ecosystems in those core geographies.
Mm-hmm. Got it.
Check sizes, you also asked.
Yeah.
We'll do anything from sort of 300K to 1.5.
Yeah. Okay. And if you think about three companies inside or outside the portfolio that you're excited about, what would they be?
Mine, we just invested in a company called Sidekick. It's a wealth management platform. The founders, Matt and Pete, are incredible, super experienced, kind of multiple exits under their belt. Matt was also formerly a VC investor, fintech investor. So what I'm really excited about, wealth management hasn't been innovated in ages, one of the most kind of oldest industries in finance. And now kind of as kind of the younger generation is becoming, access to more capital and very tech savvy, there really isn't anything that's really catering to them. So what they do is very much active portfolio management as well as other products like lending and so on. So really exciting team, really exciting space and ripe for innovation. And the other one would be a company we haven't announced yet, but it's in the climate tech space. And they've built this, essentially a software tool catering to corporates, but specifically their travel footprint. And it's like super niche, and they do a lot of like data reporting and collection and like offsetting, counting around carbon, and complete bootstrapped, almost in 2 million ARR. No one's heard of them.
Amazing.
And yeah, we managed to find them early, and we just backed them.
Brought me out in a cold sweat when you talked about bootstrap to 2 million ARR.
Yes, yeah, which is unusual these days.
Yeah. For me, there's a company still early stage, but again, it's called Simbi. The founders are experienced. It's not their first rodeo. They're more seasoned, and out of their first business, which they built, sold, and exited, sort of very deep in the healthcare space, understood another sort of major problem for their customers, and that's really sort of selling into the likes of NHS and others. So what this company is really doing is understanding sort of what's repeatable in the sales process, building out sort of use cases to be able to help scale the selling.
Yeah.
In this case, what we love is it is in the healthcare space, and in addition to helping boost the ability for companies to serve their customers and clients, they're also driving better health outcomes and reduction in healthcare costs. And they're the right ones to do it because they're actually coming from the industry.
Got it. Final question, Christmas pudding or mince pies?
Neither. Do we have to pick one of those?
We're not the most Christmassy people. I'd go for pudding if I had to pick.
I mean, I'd go for the chocolate log if that's on offer.
You can definitely go for the chocolate log. Monique, Reem, really great to have had you in the studio. We're going to get into a lot of this stuff in the main episode. Thank you so much. Monique, Reem, really great to have you in the studio with me today. We covered a fair amount of stuff in our sort of quickfire round, but you're an all-female partnered fund, but you don't invest exclusively in female founders. And whilst there are funds that have been built around those sort of lines, you've purposefully not done that. Can you explain to me your thought process and why you feel that this was important to you?
Yeah. So thank you for asking that question. It's interesting that that's, in my mind, even a question, because no one ever asked sort of three men why they got together to do anything. But you're right, it is unusual. I think to have female GPs, it is probably even more unusual to have 3 women come together to found a fund together. As we kind of mentioned briefly earlier, it really was an organic development for us, the 3 of us, to really raise this fund. Monique had approached me and Tong to raise a fund. Tong and I were already talking about raising a fund. The 3 of us had been working together already for sort of several years before we actually decided to kind of embark on the PACT journey. What we saw over that period working together was, one, we shared the same values. We trusted each other. We filled in each other's sort of blind spots. It's a good partnership when everybody thinks that they're marrying up. And I think we all kind of had that feeling for
when
various
there's no
reasons.
conflict, but you're actually kind of going, you all understand each other's strengths and play off those strengths rather than focusing on kind of where the gaps are, right?
Totally.
Yeah.
And I think the interesting thing is, you did rightly note that we are sort of diverse, quote unquote, but the diversity really comes from, what we think of as relevant diversity in our perspectives, our attitudes, our networks, our professional experiences.
A friend of mine recently kind of talked about the term cognitive diversity. I think that's really where it's not about just gender. I think we've all come from different parts of the world. We've grown up and lived all over the world, but like our core principles are all very much the same and aligned. On top of our kind of skill sets as well.
And I think what's interesting is, in addition to that sort of not just UK or pan-European network, Monique touched on it, we've all sort of lived and worked in different countries. So almost a dozen different countries, but in complementary geographies. So that comes to bear. And then we've all had operator experience, which is not necessarily the norm with early stage venture investors in Europe. And that sort of experience is varied, but we've all had various kinds of exits under our belt in various spaces or sectors.
And frankly, we are in a position of luxury saying having had launched the fund, but we don't really want to talk about the fact that we're women anymore. We just want our performance and our numbers and our metrics to do the talking. Yeah. And there's nothing against, funds like C and, other funds who they just target purely kind of female founders. It's so great for the industry. We have nothing against that. We really support, obviously, women. We're 3 women from ethnic minority backgrounds. Naturally, we have a diverse portfolio and a pipeline, and we will continue to really champion that. But we want, for example, when pitching to LPs, that's not the reason why we want them to invest in us. We also think women GPs probably have it a bit tougher, and the bar is a lot higher in terms of like performance and delivery. So we want to just focus, put our heads down, invest in some of the best founders, regardless of gender or ethnicity, but get some results, return money to LPs. So that therefore the ecosystem is more enriched with more diverse founders and GPs who have, made money and returns, and LPs are supportive of that. So we think
on that note, it is interesting. While we don't necessarily have a mandate to back women founders, we do very much actively work with our portfolio companies to hire senior female management as they kind of
that's if they don't have any already, right?
Yeah. If they don't have it already. And the idea there isn't about a gender quota. It's really thinking about, going back to that idea of relevant diversity. Do you have the right mix of people and voices in the room? Because diversity does drive returns any way you cut it. And that diversity can come from gender, that diversity can come from geography, sort of immigrant backgrounds, sector specialisms. So, where they don't have women, in senior positions, we do work with them to hire that.
So if they hire more senior women in senior positions who have meaningful equity, that's another thing we ask for. And ultimately, those companies hopefully make money and generate returns. We want those women to be empowered by that, also make money along the way. So it isn't as black and white as saying female founders or none at all. There are so many other ways of getting more diversity in women and other kind of genders and people involved in at a senior level, and hopefully put that back into the ecosystem eventually.
Yeah, I think there's a couple of things that come to mind just as you were speaking. We're going to cover a bit more of this further down the track in the podcast. But the 2 things that immediately sprang to mind is I remember very vividly a founder going out on Twitter and essentially throwing shade on a fund that I know that does back female founders and is predominantly set up to back female founders. And said, this founder was sort of like, they didn't back me. They're not walking the walk.
Was he a man?
No, this was a woman, right? And I found it really uncomfortable because I was like, I can understand that you will be upset that this fund didn't invest in you. I can even understand that you are maybe a little bit upset about the fact that they didn't back you, even though you are a female founder and they explicitly say they want to back female founders. But equally, this is venture, right? You're still backing businesses for the best returns. And if you don't, if you don't feel that that particular founder or that particular business is going to lead to the best return, then clearly, and with limited capital, right? Because you don't have an unlimited pool of capital that you can invest from. You're going to have to make those sort of tough decisions. I actually found it really uncomfortable because I was like, you're actually doing a bit of a disservice both to them as investors and to yourself, because actually, if you're a great business, you will attract funding from someone irrespective. And the second thing that came to mind, just when you're talking about kind of hiring in, ensuring that some of the portfolio companies make sure that they diversify their leadership in whatever way that may be. One of our guests, this lady Jelaine, used to work for Microsoft, and she's quite active kind of within a number of groups. And she said she went to this talk and the lady on stage kind of said, you can tell that no one at Apple who designed the iPhone was a woman. Why? Because no one would have made it black because you can't find it in your handbag sort of thing. This is like, 10 years ago. Clearly they've come up with different colors since then. But this is the point, right? Like, it's that diversity of thinking that leads to product breakthroughs, that leads to understanding your user in a different way than you would otherwise necessarily have done. And I also think, from your perspective, yes, 3 women LPs, all from diverse backgrounds, all from geographically diverse experiences, actually, I would imagine that probably leads to having a huge amount of like the cognitive diversity that you're talking about, a huge diversity of thought around what good looks like and who good looks like, and not using who in the sense of color or ethnicity or gender or anything else, but actually what are the traits that make someone really great? Would you agree with that?
Definitely. And I think that sort of discrepancy or let's say deep discussion that we have around that is informed by the sort of variety and breadth of the experiences that we each respectively have had.
Yeah.
So that kind of goes back to bringing in the value of diversity. I think we've seen things in our experiences prior to this that might buck trends, which then helps us sort of spot perhaps those outliers, and really those sort of founders that are those outliers that others might overlook.
Yeah. So kind of drawing on this theme of diversity, not like, and I always say this is not a podcast about diversity, and I think it's a disservice to the ecosystem to only look through that lens. But equally, being someone of a diverse background myself and having sort of experienced a lot of the casual white maledness about the venture capital industry, we all know the statistics around capital flowing to underrepresented individuals, and that's just as true for LPs investing into diverse managers as it is VCs into founders. So what is your opinion on the way that LPs should and can invest in more diverse allocators, and why is it important that they do this?
I think we can start with perhaps why is it important that they do this? You read a lot of the studies out there, and even without a mandate, the likelihood of a diverse manager investing in a diverse founder is much higher than the standard. In this case, in VC, sort of the standard white.
I think it's
white
3
male.
times higher. Yeah.
Three times more likely
A
that
diverse
a diverse
GP to invest in a diverse founder is 3 times more
which
likely.
which I would completely buy into. Yeah.
So if you want to be able to get as an LP the value of the diversity, right? If they say diverse founders can also bring sort of better results oftentimes.
Well, I think women founders typically deliver higher returns on average than
exactly.
Male founders,
so if you want to be able to get that kind of access to that kind of return, then your best bet, if you're not doing direct investing yourself, is then to invest in and back sort of that wave of quality, diverse GP.
Yeah.
So that's kind of the reason why you would do it. I think the question about how, you just do it.
Just do
You
it.
just- I'm not sure if there's a secret sauce to it. You just kind of
I do think a shout out. We can't name names, but we have just secured a really major LP ticket from a large and very established kind of
We can name names, though.
institution.
go for it.
Well, we can name it.
Yeah.
So we just secured a major investment from M&G, the
Oh, wow.
asset manager,
Yeah.
and it's from their Catalyst fund. And I think they've gone about it in a great way, rather than saying, we're just going to back female founders and kind of skip the allocators. They've really kind of taken a two-pronged approach and looking at the allocators. But the bar was so high to actually get this money. It took us months of DD, and they really focused on performance. And they said ultimately we were one of the best, most experienced team, as well as one of the kind of longest track record.
Yeah.
That's why they backed us.
And
so.
reference calls. I
And
mean, they went
references,
deep on
yeah,
references.
they really went deep. So that to us, I think that's a great start. I think I mentioned this the other day in terms of emerging managers. I think it's all positive. It's not doom and gloom. This is getting better. There are more different groups of people who are launching funds, and I think that's absolutely the right direction. But I think it's always hard to get them off the ground. For example, if you don't have a network of high net worths and family offices, or even your personal runway to spend 2 years raising a fund, launching a fund. So there need to be more initiatives like M&G, really building, like having a very clear purpose and a very kind of high bar to receive this funding rather than funding for the sake of funding.
Well, I'm going to be talking to the team behind Thema in a couple of weeks. And it sounds like they very much have that.
They are very passionate about this topic. We've discussed this at length with them as well. So people like Sam and George launching Thema, absolutely, that's the right direction. That's what needs to happen. And I think it needs we need to get out this mindset of it's old boys club and only raising money if you come from money and so on.
Yep.
I think there are the other thing within this though, and this is the cautionary tale that I think we may be walking into. So, over the last several years, obviously with all the capital that has been flowing, a lot of people raised funds, right? A lot of diverse allocators raised funds, right? Whether that's from ethnic backgrounds or whether that's gender. We've seen a lot of people raising funds and deploying. Now the question and the possible outcome, you talked about track record and performance and really sort of backing those allocators that can prove that they have what it takes and have shown that they can. I think the thing that I am worried about, hey guys, sorry to interrupt, I just wanted to introduce you to our sponsor. This episode is sponsored by Emerge One. Emerge One CFOs partner with VC-backed founders from seed to Series B to manage and raise capital and plan how it should be deployed, controlling cash so that they can do what they do best to scale strategically. You can find them at emergeone.co.uk. That's emergeone.co.uk. Okay, let's get back to the episode. If worry is the right word, is that you may well now see a lot of the bets that these allocators have taken not come off because, again, they were investing at the peak of the market. The market has shifted quite dramatically. Everything has sort of changed quite significantly. And as you said, it is far harder as someone from a diverse background to raise funding unless you are raising funding from someone from a diverse background. And what I worry about is that there will be this almost regression amongst LPs, that they kind of look at what happened over the last few years, see, well, we funded this emerging manager because they were diverse, etc. But actually the returns haven't been great. Actually, we're going to stick to our knitting and we're going to go back to the 40-year-old white guy, who's been sat at a fund for the last 20 years. And that's a safe bet. I think that's the bit that I hope doesn't happen, but I'm kind of sitting with the back of my head. I'm sort of like, I can see that playing out, over the course of the next couple of years as people go to raise their sort of second, maybe third funds, right?
So that's an interesting point that you raised because that's very much sort of part of sort of that question that you asked earlier is, how should they be doing this? It's go out and do it, but you really have to be backing managers who you believe in.
Yeah.
It really cannot be a box ticking exercise, because it'll come back to bite everyone.
I think the same applies for when investing in female founders. Absolutely.
Yeah. Female or diverse, right? You really have to back quality. You have to, have, whether it's a founder, whether it's a fund, have it go through the same level of rigor and really understand sort of what the value of that diversity is bringing and how that's going to help them outperform. So how is that part of the superpower? If it's just a box ticking exercise, then you kind of run the risk of doing a disservice to kind of the movement. of kind of having more sort of capital spread out amongst diverse allocators or diverse founders, because it'll come back to bite everyone when and if those companies don't perform.
This was a major reason why we decided not to just do a female founder-only fund, because we knew, for example, when SVB was going bust, didn't everyone blame the fact that the ESG policies were distracting the management
immediately
team?
Yeah.
So unfortunately, whenever something goes wrong, diversity, D&I, ESG initiatives always get the blame.
It's happening again
right now.
It's happening right now. I mean, Elon Musk is out there. I think it happened with American Airlines, or whoever it was that had the recent problem, right? And the door flying off the airplane. The immediate thing was, oh look, they're now, they are part of their bonuses tied to ESG or DEI. Shouldn't it just be tied to safety? Well, actually, that was like a minor component, but it's been blown out of proportion.
Which sadly, that was D&I and ESG was generally seen as like a luxury or like a nice to have when things were going really, really well. And obviously now people are tightening their belts. Everyone's suddenly talking about profitability and really solid unit economics, which is something we were always focusing on anyway. So at the end of the day, we don't want to just say that like if we're a badly performing fund, we probably very likely for us to raise fund 2 and fund 3. Whereas if they were, I don't want to pick on like gender or ethnicity, but if it was, let's say 3 white guys, no shade on them, but it wouldn't be as questioned and it would be as difficult for them to go and raise 2. As it, we're not complaining.
The bar's a lot higher.
We are in a position of luxury having launched our fund, but this is why we want to ultimately kind of think of it in long term, a 10-year, 20-year game rather than just like the next 12 months or the next trend and so on.
Yeah. And I mean, tying this all together, I mean, the way I always think about it, and this goes back to your earlier point about making sure there are, there is strong diversity within leadership teams with equity stakes. The way I look at it is if you have diverse GPs founding diverse founders, and hopefully those founders and or teams have meaningful exits, that capital gets recycled through the system into LPs, and you broaden the base, right? Like where I would say we're not necessarily quite at the beginning, but we're in the early stages of that happening. And here in Europe, of course, we know that those exits are less forthcoming and potentially less lucrative maybe to the teams that are in place. But as that continues to happen, hopefully you see that broadening at the LP level, then to the GP level, and then into founders, right? And
I mean, it's a cycle. There's the derivative effect, and you hope that you kind of set the cycle off in the right direction, and it kind of positively reinforces itself rather than goes down that negative.
I also just want to mention, Reem, talking on your behalf now, but in their previous, Reem and Tong's previous fund, they also had a fund of funds arm, and Reem was especially responsible for like 6 managing LP relationships in like 6 or 7 of the top seed funds in UK and Europe. And we've still maintained a close relationship with those GPs, and they're a mix of men, women, different genders and ethnicities, and they're veterans in what they're doing, and they've really kind of lifted up the hood, shown us how things are done, and really mentored and supported us. So we're thinking with that mindset, building our fund for the long term, as opposed to just, as I mentioned, just the trend.
Yeah, and it sounds like how do you do the same thing? How do you open those doors and lift the hood for others, right? And it's I think we sit on a couple of WhatsApp groups together. I think one of the things that I've loved about being on those WhatsApp groups, especially sort of the one that's sort of focused on emerging managers, is that there really is there is no shame in asking the question. The responses are always massively helpful. They could be the simplest questions or the most complex, but someone somewhere on that group has been through that, has gone through the pain, and is willing to share, right? And I think that's the other thing, and it's very similar to founder communities in that sense as well. I think that ability to kind of educate and help others that have, that are coming up, that haven't done this before, that maybe haven't had the experience, and you guys clearly had a huge amount of experience before you raised PACT. But there are others that are raising from scratch, first fund, never been a VC before, but just passionate about what they're doing. But it really helps to have that kind of ecosystem that's there and supporting you, right? Because, having looked at it myself, it's not the simplest of things to do.
No, it's not fun, and we are very much an open book. There's this kind of recently GPs are, offering to help each other with LP introductions, so it's, as I mentioned, it's all heading in the right direction. It's all quite positive, and the ecosystem is really helpful. We always say, like, if any GP or people who are thinking to launch a fund want to come to us, we're happy to kind of tell them how we did things, how to negotiate. I always make a joke about the Turk, the Arab, and the Chinese. Yeah. Like, we are negotiating everything. So if we can give any tips about,
I mean, there's clearly a joke in there, but but
we'll save that for another time. But everything's a negotiation. So even if it's small things like tips and advice on how to, deal with service providers or who worked, who didn't work, we are very much open for that.
And a big shout out actually on that point to Paul Hastings, who have done our fund legals and set up pro bono.
I mean, oh wow,
so
amazing.
Talking about negotiations, they were a great partner, and sort of finding ways to kind of shortcut some of the pain, and oftentimes it's financial pain up front when you don't really know if and when you're going to raise the fund. How do you kind of make things work? So there's sort of practical considerations. There's also more esoteric considerations when you have a family as well.
I mean, yes. I was just laughing because at one point in a previous life, I set up a business called Two Brown Boys, which was with.
That also sounds like the beginning of a bad joke.
Well, I mean, I think the whole thing was a bit of a bad joke by the time we finished. But it was, I mean, like I think there is. We can joke about it because we're sitting here, we come from these backgrounds, we're able to kind of do that. The reality is that, we all stand on the shoulders of giants kind of thing, right? Like, so at the end of the day, if we don't draw on each other's experience and lean on others who have been there and done that beforehand, we run the risk of making the same mistakes or worse in the future. So I think it's wonderful that you guys do that. And talking about Tong, and you've talked a little bit about the origin story. So clearly, Reem, you and Tong were working together before, and there was sort of upstream, downstream interaction with the fund that Monique was at. But how did you actually come to that decision of let's raise a fund together? I mean, did you essentially decide that the funds that you're working with were great, but actually you wanted to do your own thing, or was it just such a gelling? Coming together of minds, if I can put it that way, that you're like, actually, it would be stupid not to do this? And what have been the most significant challenges you faced since you started the fund back in 21?
That's actually a great question. I think for me, it was probably both of those things. I mean, Tong I knew inside out because we were in the trenches together. And Monique, I knew obviously through the deal flow sharing aspect of things, but also kind of through connecting over what we saw and what we thought was kind of missing in the industry. So I knew that there was a values alignment amongst the three of us. I knew there was sort of deep trust as well amongst the three of us. And I think for Tong and I, we talked about the fact that we felt that, we were big drivers of building that first portfolio for the other fund. Mm-hmm. And then we thought then there's an opportunity for us to actually kind of step up and kind of have a better piece of the economics, quite frankly, to put it bluntly.
It's one of these crazy things that, I think I mentioned this before, like one of the biggest aha moments I had about venture was when Hussein Kanji turned around and he goes, the purpose of raising a fund is to make money.
Right? Why else are we here?
And the purpose of raising fund one is to be able to raise fund two and make more money.
Oh, shout out to Hussein, by the way. He's given us so much of his time.
Yeah. He is like the hardest working but most open guy in venture that I know. But I mean, like what it really kind of sparked in me was this. I think I'd always had this slight misconception that the venture was all about funding innovation, and of course it should be, right? But that's almost secondary to the primary focus, which is, okay, how do you make returns both for yourselves as well as for the LPs? But with that said, so you wanted a better piece of the economics, so you decided to raise a fund, and that makes obvious sense. So
and beyond that, I think we also had a vision sort of for strategically what was missing in the early stage landscape. So obviously better piece of the economics, but then why us?
Yeah.
Why are we different? Why are we the ones to do this? And I think that we just basically sat down and talked it out.
Also, when we got into venture, it was 2016, so things looked a lot different back then. Not to sound like, a boomer, but things did look a lot different back then. But
you definitely don't look like a boomer.
Yeah, I know, unfortunately. Well, my point was really going to be about kind of thinking how can we really add value to the ecosystem, get together and build something kind of really unique. Even, for example, when I wanted to, when I was thinking about leaving my former fund, I was interviewing and I just was like, these we're all the same people. Like, I am not gelling with anyone. And I'm like, seriously, something is really missing here. And I was like, I built a fund at 23. Like, I'm sure if I build it with the right people, we can do it bigger and better. And also, frankly, this didn't happen overnight. I think it's really important to not be misleading, saying like we magically got funding and launched the fund in 12 months. I wish that was the case, but there was a lot of blood, sweat and tears.
No.
And we got together probably in the worst time of human history, which was March 2020. And
Wow.
then we were like, okay, WTF, what's happening? And then we spent actually most of lockdown talking daily.
Yeah, I was about to say.
And
We
planning.
only had one face-to-face meeting.
Yeah.
Like,
And
after
then
we
you got really
decided-
sick, and then
yeah,
we
got COVID.
Then Reem
Yeah.
got pregnant, and then I got pregnant, and then Tom got pregnant. So we spent that time, like especially first trimester, which no one ever wants to go through.
Yeah.
We essentially were planning for about a year, just talking on a daily basis, just understanding like, right, if we were to do it, how would it look? What does a thesis look like?
So, and actually making decks. Let's not forget the hours
We were like
spent.
probably
Like, actually
decks. I think I was
virtually.
like seeing decks in my sleep. I was
Yeah.
like seeing like hallucinating about different
Yeah,
versions
that portfolio
and so on.
allocate that portfolio construction slide
Gosh,
is always
um,
always a fun
yeah.
one.
Yeah.
And I think, and we spent a lot of time going out and doing research and speaking to these kind of GPs that already built funds.
Yeah, and I think also, I mean, not to sort of belittle it, but even how do you present your thesis in a concise way?
Yeah.
I mean, ABC's super catchy, but the first draft we had a super complex.
Can I just say
if you
that was the
remember.
only creative thing we've ever come up with? It was just downhill from there onwards.
Yeah.
So I think, we spent a lot of time really planning. And, frankly, a lot of first-time funds do fail because of the team's dynamic and the teams just don't work out. Like, we've been really thinking and talking about this for 4 years and planning for it. And I think we're only getting stronger and better as a team.
Yeah.
What's quite funny is when we first set out, like, I raised all of the funds and we're managing the funds for my former fund, and the team are very much, we deployed about 55 million prior to launching PACT, kind of combined. But as we were evolving, as we were launching the fund, we were like, wait a minute, like I'm actually not that good at fundraising, but I'm kind of good at sourcing deals. Like you guys are amazing at so like kind of the roles were changing all the time, and we were very open about it. There was no ego, and like we've evolved only to be big, like a better team. So again, that can only happen with time. You can't really kind of do that overnight. So
I think that just to kind of
Mhm.
tease out a big theme of what you just said was communication and
Yeah.
open communication.
yeah,
And because we spent the time kind of talking about things objectively without ego, we really started to understand sort of how each person thinks. And even though we'd been working together, in the context of a new fund, it's a different structure. The demands, the expectations, the things you have to get done are different. And so there is a realignment. And it only works if, you do have an open and direct culture, which I'm really grateful to see that, over time, teams either like schism and fall apart, or they really gel. And I think we gelled. I think you've touched on it as well, but the fact that all three of us had our first children while we were raising the fund and thinking about the fund, I think, again, it could have been a deal breaker, but it really bonded us because we had to figure out how to do things differently.
I mean, look, I think the fact that you kind of were talking for 12 months before you kind of actually launched, as it were, right?
Yeah.
That period of getting to know each other, I mean, you knew each other, but really getting deep into kind of why, what is my, so if you'd gone into this and Reem, your vision was like, I just want to make, tons of money. And Monique, you were like, well, actually, no, I want to make an impact on the world. And actually, I don't really care about the return. Like that wouldn't have worked.
Yeah.
But making sure that you're all on the same page, at least in terms of what the objectives are, what the thesis is, like, again, I want to invest in deep tech. No, I only really like consumer businesses. That's not really going to work, right? So I think that communication, as you said, is...
And let me actually add to that, Aarish.
Yeah.
We didn't just talk over that period. We were doing deals.
Yeah,
Okay,
with
so
our
you're
own
investing
money,
at the same
yeah.
time.
On a deal-by-deal basis.
SPVs.
We pulled together syndicates.
Got it.
And so it was essentially our fund zero.
Yeah.
We joke and laugh about it in that way, but it helped us not only talk, but kind of do that market validation.
Yeah, test the thesis.
Put it out there.
Yeah.
Is it sticking? How are potential LPs, i.e. co-investors in these SPVs, responding and receiving this thesis? How is the founder market responding and receiving to it? What is our value add? So it helped us kind of work through from conceptual to kind of market validation. So again, to your point, advice on emerging managers, it really doesn't happen overnight. And it kind of is that same journey that founders probably go on from sort of pre-seed to seed and we kind of think about that as fund one or fund zero, first close, and now we're on our final close, right? So a lot has happened even in the last year. to kind of mature us as a fund.
Let me ask you this, right? Because just as you're talking, it struck me as quite relevant. Like, so, you know, that co-founder fit in a startup is really critical. But then there's always the question, could you go it alone? Should you go it alone? So do you think that the three of you fundamentally wanted to do it together? Or if it hadn't worked, in the absence of that relationship not being there, do you think you would have gone out and done it individually?
I think we waited for the right. I think all of us had aspirations to be entrepreneurs, and
Sure.
in this sense, it's the entrepreneurial fund journey, right?
Yeah.
But I don't think any of us rushed it. It just kind of clicked because it was the right team.
Yeah.
And I don't know how solo GPs do it. Like, I can't think of not having a team where, you know, we're constantly bouncing ideas off each other. We've got such different like experiences and skills where it's very complementary, and like I don't know how solo GPs do it.
Yeah, I mean, really hats off.
Imagine.
It's not just sort of the pragmatic side of having a partnership. It's also, I think, you know, the often less spoken about emotional side of it. You know, it is a difficult thing to kind of go and raise, and you kind of have to take a market beating, especially this last year in this environment. You know, same thing. You know, there are days on you know the deal side. Are we seeing the best deals? You know, do we like the founders that we're backing? The answer is yes. But you know, the question is, you know, are we
good
seeing,
answer.
but are we seeing sort of the right things?
Yeah.
How do we make sure that we're, you know, getting stronger sort of LP GP fit, stronger GP founder fit? You have all of these sort of more existential questions, and the fact is we have people that we trust, each other, to sit down and work through those. Which, you know, it's a very lonely world if you're doing it alone. I couldn't imagine.
Let's get the violins out.
Yeah, I mean, no. I've got to be honest. Like, as someone has you know, founded and failed, founded and hopefully seeing some success, although not in the tech space, but venture adjacent. Like, I know personally that I'm the sort of person that not necessarily not that I don't play well with others, but the person I'm working with has to have the same values. They have to be driven with you know with the same purpose in mind. It's really hard to find people like that, right? Like, and you can go a lifetime with that. Like, you know, if you're lucky, you found it in your partner, potentially in a business partner. But you know, as we've talked about on the podcast in the past, right, the relationship between a VC and a founder lasts longer than the average marriage, right?
Yep.
So imagine the relationship between GPs, right? Like that.
We're very well aware. I think I speak to Monique and Tom, where I love my husband to bits, but I think I speak to them more than I speak to him.
And we see each other more than we see our husbands. Anyway.
Yeah.
So what happened to two brown boys, Aarish?
Yeah.
Oh man, that was
only one brown boy.
There's only one brown boy left. Yeah, no, look, it was a really odd one. We had a plan of just doing stuff together, and we actually had really strong value alignment, or at least we thought we did. And this was a friend of mine who was living in Spain. We kind of coalesced over this weird thing that Alex Dunstan, Doug Scott, and Chris Topman from Notion had come up with sort of 6-7 years ago, called Linky Brains, which was basically ultimately just a bunch of people with ADHD and slightly neurodivergent kind of personas coming together and just realizing that actually there are other quote unquote weird people out there, right? And he and I, you know, we noodle over a bunch of stuff. We wanted to get some stuff off the ground, but nothing really clicked. And then I think sort of just kind of as the pandemic hit, we drifted apart, and we just stopped working. But actually it taught me a lot, right? It taught me a lot about, you know, I guess that diligence, about spending that time talking, about spending the time really getting to know. We set up what I call the bro founders agreement, which was, you know, like a co-founders agreement, but not talking about any of the sort of like, this is what we do with equity, this is what we do with, you know, bad leaver, good leaver. It was more around, you know, what do we believe in terms of our values and so on. And I think that was a really important thing, and actually it helped make it less difficult when we kind of decided not to. Well, we didn't really decide when we kind of drifted apart. But for me, I think the ultimate realization for me, as I say, is like, I'm very good on my own. I don't like playing second fiddle. I struggle with that, which is why I'm unemployable for that
Fair
reason.
enough.
Which is cool. I'm okay with that. But I love working with people that are passionate about what they do, and when they are, and I see strong alignment, and I'm working, with someone potentially over the next, into the future, over kind of an expansion of what we're doing in Emerge One. It is very much because we have strong alignment of our values, what we're in it for, what we both want to make out of it. Like, what is our goal financially? All of these things are really important. And at the end of the day, I think you learn. Well, I certainly do learn from all the things that have gone wrong in the past, and take those lessons rather than just assuming that they were failures. I think at the end of the day, you've got to go through the hard yards in order to be able to do the right thing. Like, everything is an overnight success after 10 years, right? Like that's the reality. And I mean, I write about this sort of stuff a lot, on LinkedIn and elsewhere. It's kind of crazy when you see people coming out on social media saying, founders do that. I wrote this today. I'm not going to say who it was specifically about, but founders do this, one line pithy piece of advice, do only this one thing, really spurious kind of understanding or background as to why, like, they have any platform to say this about, and then like a stinger to get people kind of wrapped up. And actually, when I'm looking, I'm like, everything is nuanced. Like, life is nuanced. You can't tell, you can't say to all founders, track this one metric, because that one metric may not make sense for their business. And the same goes for co-founding, right? Like, every co-founder's journey is different. It has a different flavor to it. And I love the fact that you guys, I guess, you tried before you buy. Well, you tried before you buy. Tried before you bought, in the sense that you had worked together, you had worked on deals together, so you kind of had an appreciation of each other before you came into it. And it's where I get a little bit concerned about, platforms like Entrepreneurs First, etc., because that's a very short period of time to get to know someone and decide to build a business that is going to be 10, 15, 20 years, in the making, because you just don't get that chance to really explore each other. That was a massive tangential.
No, it's super interesting.
But you talked about your thesis as well, right? So you invest under this ABC thesis: access, betterment, and climate. And you're all vocal about the need for positive commercial as well as wider stakeholder returns. This is a conversation I've definitely had on this podcast before. And I would definitely say that, having worked with impact businesses in the past myself, I always do wonder whether founders ultimately end up making some sort of sacrifice, either sacrificing financial returns or shareholder returns, or they're sacrificing stakeholder returns. So how do you think about stakeholder impact, and why, other than just because it really is, did you decide that this was important to the way that you wanted to deploy?
So the way we think about impact is probably both in a traditional way, but then we add our own sort of layer on top of that. So typically when sort of impact investors look at impact metrics, they sit down with a founder and they look through sort of the who, the what, the how much, the kind of contribution, what would happen if that business didn't exist.
Yeah.
We do that with our founders at sort of throughout our diligence, but really at point of investment, we kind of sit down and actually sort of crystallize what those are. But then we kind of run it through another filter, which is sitting down and really understanding what the right kind of target growth metrics are for that business commercially. And then we sit down and look at the sort of 2, 3, 4 impact metrics that we might have come up with the founder, and understand which of those are actually going to help drive their growth commercially. So that it's looking at it in terms of sort of a collaborative set of metrics or targets, rather than ones that are at odds with each other. And for example, one company that we recently did, I think it was announced over the summer, is an Insurtech company out of Germany. And sort of the impact metric that we ended up landing on is the number of SMEs that they backed, or solopreneurs that they backed, right-sizing their insurance that would have otherwise have had existential damage or existential claims to their business, right?
Yep.
So if you are uninsured, or even worse, where you think you have insurance, and the bad thing happens, God forbid the fire happens or the flood happens, or fill in the blank.
Yeah, been there.
And it turns out that you don't have enough coverage, your business goes under.
Yep.
So that can kill sort of the lifeblood of an economy, especially when you think about sort of SMEs as driving sort of.
And most SMEs don't have business interruption. They don't understand how to plan in case of that failure. Insurance is, a nice to have often, like in some guys, it's never going to happen. And then it does.
And it was this wonderful light bulb moment when we were working with the founders, through this process where they kind of retrospectively looked at all of the people that they'd insured, and then they kind of ran the numbers, and they looked at it and they realized that 25% of the people, I think it was 25% of the people that they had insured through their platform are likely to have had some sort of existential event come up in their business going forward. So just thinking about sort of the number of entrepreneurs that they're sort of saving, quote unquote, through their platform, also gives them, even though that was a goal of theirs, putting it into numbers and helping them target that number makes them put more heart in their business.
Yeah,
as well.
so it's a leading metric that they can then use to drive the business further, right? Like if we know that we have impacted 1,000, 100,000, a million SMEs, like that puts actual, yes, obviously it drives commercial, but it puts meaning behind what they're doing. Right?
Exactly, and that kind of a metric isn't going to be at odds with their commercial growth.
With their commercial growth, yeah.
One thing I'd add to that is our thesis isn't kind of obviously kind of purpose driven obvious, but I think more importantly it's always down to like the founders mission and their values. For example, we invested in Sidekick, and you wouldn't think wealth tech, that's the first thing that comes to your mind when you think of like an impact driven business. However, if you get to know Matt and the team, their aim is to essentially make this kind of service that's been around for hundreds of years, but only accessible by the 1%, make it available to everyone.
Yeah, it's inclusion. Yeah.
Inclusion. And, they do it with informative and educational pieces around getting women to invest more, for example. And, they've done an event around kind of targeting kind of the Black community and saying, this actually is really easy to invest in. You are eligible because of XYZ reasons. So I think it's down to what does the founder actually want? For example, if Matt only wanted to build a wealth tech business and just be like, I don't give a damn who I serve.
You can swear, by the way, it's fine.
I don't give a shit who I serve. I am going to just go out and build this massive billion.
You build Robin Hood,
essentially. Or you build Robin Hood or Free Trade. I mean, they're doing extremely well, but they're not the people we want to back. They're not really kind of the legacies we want to kind of support.
And there's probably a market for both.
Completely.
But at the end of the day, there is a large enough market for this too.
Yeah.
Completely.
I think. I mean, we talk a lot, and we've had Igosa Omigwe on the podcast in the past, and he talked about, he didn't like talking about underrepresented markets, but what he loved talking about was underserved markets.
Underserved.
And I think that, when you talk about that, a wealth platform like Sidekick, that's exactly what I think of, right? Because underserved doesn't have to reduce everything down to gender or to ethnicity or whatever. So in fact, Igosa talked about, a business, a founder that he'd been talking to, a white guy in the US sitting in the Midwest or somewhere, and had built some really interesting thing in the life sciences space. And Igosa said, well, why don't you think about sickle cell, right, disease? And this founder was like, oh, this is like a massive problem. Hadn't thought of it, and started going about solving it, however that may have happened. But the point is, this underserved market of essentially Black people, right, typically from Nigeria and West Africa.
And Middle Easterners.
And Middle Easterners, was not aware of that. But also not just in those areas, possibly in, the heartlands of the US or in the UK or Europe or whatever, that market is underserved, but is being served by someone who wouldn't be considered a diverse founder. And this goes back to kind of the top of the show where you talked about, investing in everyone, because ultimately you can breed diversity through that. For me, that's really important. I think that point that you can have an impact on underserved markets without only having to go down the route of investing in quote unquote diverse founders, right? This was an absolutely incredible conversation. I'm pretty sure we could have gone on for much, much longer, but I think we're gonna have to cut it short there. Reem, Monique, it's been absolutely wonderful having you in the studio with me. For our audience, where's the best place for them to find you online? You're on LinkedIn, Twitter. Where can they find you?
LinkedIn is a great spot for us.
Excellent.
Or WhatsApp if you have our numbers.
Yeah.
I won't share that in the show notes. But
thank you so much for having us, Aarish.
No, it's been absolutely wonderful having you both here. Thank you so much.
Next time we'll turn the tables and put you in the hot seats.
I'm ready, willing, and able. Thank you so much.
Thank you.
Thank you.